Okay. So first and foremost, thank you everybody for coming tonight. We really appreciate the support that you show, I guess, the Oasis brand, very much so. Our clients have always been our biggest proponents of our service, and certainly the word of mouth that we receive from all of our clients. It certainly doesn't go wanting on us. We very much appreciate it. So thank you again for coming out. Introduce Gavin, everybody knows. So whether introduction needed or otherwise, Simon Kitson, economist and co-founder of Blue Sky.
That might help.
That might help.
Now it's not that Adam doesn't know who he is, it's that his bio is so long you need a paper to read the bio on.
We're literally talking a 28-year career, trying to
explanation.
succinct this into 30 seconds here. So actually I might let you, maybe just a very quick snippet of who you are, what you do.
Yeah, sure. I came into financial markets in 1987, just in time for a baptism of fire, and then ever since then I've been managing money for about the last 27, 28 years. I manage a hedge fund at the present moment in time, which has got a risk that's very similar to equity markets, but is very, very uncorrelated. So I think one of the reasons Gavin's brought me here is because I look at things perhaps quite a lot of very differently to the vast majority of investment professionals that you're likely to meet. And do bear in mind, one of the reasons being is because they make money out of markets going upwards, and markets don't always go upwards. So
Simon's our financial and economic brain for the evening. So
And if I could give a plug, which is probably too modest to do, GFC, which we all remember. So in the year of the GFC, 52% he made for his investors. So there's people out there, and obviously who's stressed in times of volatility, you could do a lot worse than to pick up the phone and speak to Simon, and I honestly mean that. So
Ramzey Choker, co-creator, co-founder of the Grounds in Alexandria. Everybody's very familiar, the Grounds in Alexandria. Quite an interesting story that you yourself have in terms of your own business, sort of acumen, your entrepreneurship, your history as well, which we'll get into later. 2 seconds just on yourself.
Yeah, basically, I was very lucky as a young kid to be exposed to it for business from my father, and I went through a pretty good turns and bad turns, and learned a lot of lessons. And now I'm just a man on a mission, and got some really amazing people behind me and really amazing staff, and trying to conquer big dreams. And yeah, that's where we're going.
Good. Appreciate it. One final note of housekeeping: mobile phones, silent, vibrate, whatever it is, just so. Really, of everybody, really.
the reminder.
Simon, I'm going to start with you.
Sure.
China and America, their economies, obviously a lot of press about it. How do they relate to us, directly, indirectly? Where will that be leading our economy, if at all, in the next sort of 1 to 2 short term?
We used to be the 51st state of the United States, and that's changed. We're now the 49th province of China, and one can't underestimate the impact that China has had on Australia in that regard. One of the things that we were talking about earlier in terms of in the post-GFC period, when things went horribly wrong during the GFC and everything went down, people were talking about how the Rudd government had their various stimulus, and how he's more than willing to suggest that saved Australia. What actually happened was China saved Australia, because China went on a money printing extravaganza like the world has never seen. And to put that into context, the Chinese banking system created more loans, and those loans weren't backed by savings, so it was money that was printed. More loans over in the post-GFC period than the entire US banking system had done over the prior 150 years. And the government
What sort of time frame are you talking about?
About 3 years.
3 years.
And over that same 3-year period, the Chinese government went on a fiscal expansion. So they started to spend money, and they started to build stuff. They built roads, they built ports, they built airports, they built railroads. And to put it into context, the amount of cement that they used during that period was more than what the United States had used in the prior 100 years. And I don't know how many are familiar with the Hoover Dam that was built in the United States back during the Great Depression. And it was a great centerpiece. Well, China used enough cement during that period for 8,000 Hoover Dams, which is equivalent to about 160 Hoover Dams per state in the United States. over a 3-year period.
How does that relate back to our economy, just to tie it
Well,
in?
it relates back to us because that's why we had a massive commodities boom, particularly in terms of iron ore, because that was going into the steel, which was going into all the structures. So China has been very important. Now, they slowed that down in 14 and 15, and in 15 we saw China go into a massive recession, which of course, if you look at the statistics in China, did not appear, but they don't. And over the last 6 months, the pressure of that has come to bear on the Chinese government, and the Chinese Communist Party is a very fickle thing. You know, it wants to retain control, and it's willing to do so at whatever price. And so subsequently, we have started to see China decide to print money on a quite substantial scale. No, on a massive scale. The only thing that compares by comparison would be the Japanese, who have gone completely ballistic. So what that ultimately means is, whilst the rest of the world is currently slowing, so you said the US and China, the US is currently slowing, and their economy is slowing quite rapidly, contrary to most of what you would be reading. Earnings in the United States for companies is slowing very rapidly indeed. And if you actually look at income tax receipts at the US Treasury, it's gone negative by about 6% year on year. So the US is slowing, but China and Japan are going up. So we've got a very interesting juxtaposition at the moment. China and Japan going bonkers, printing like crazy. America and Europe starting to slow. Australia somewhere in between.
Now, just let me challenge you on that for a second, insofar as the last report out of America, whether it was monthly or quarterly, I think it was monthly, was that there was real wages growth. So is that being papered over, or is there some political...
That was wages growth and employment growth.
Yes.
Both of those.
Yeah, I mean, there's two aspects to that. The first thing I do is rather than, bear in mind when a number comes out and it says there's wages growth, that relates to a guesstimate coming out of the Bureau of Labour Statistics. What you're far better off looking at is the income tax receipts at the Treasury, because that's not a guesstimate. That's what that gives you a very good indication of what people are earning, and those are falling quite quickly. Do bear in mind that when you see numbers coming out of the BLS, the Bureau of Labour Statistics, each month for the non-farm payrolls, those numbers are a guesstimate. And do bear in mind also that they are seasonally adjusted. So somebody makes a guesstimate as to how many jobs were created, and then they apply a series of seasonal adjustments to them. So when the number comes out at 200,000, the seasonal adjustment might be between 2 and 3 million this time of year. Right. So the actual number was plus or minus 2 or 3 million. And then somebody makes a guesstimate as to how much seasonal adjustment they should apply. They then also make a guesstimate as to how many jobs were created by new businesses. And new businesses generate most of the jobs in any country. And they guesstimate that they created half of all the jobs since the GFC. Gallup, you've all heard of Gallup polls, they follow this fairly carefully. Their guesstimate is that new companies are failing at a faster rate than new ones are being created, and that jobs are actually going backwards. So do be careful when you look at numbers. This isn't a conspiracy theory. It's not suggesting that the US government makes up the numbers. The Chinese government does. But the Americans are very honest about the way they go about things, but they're very good at moving the goalposts, as we all are, to suit our purposes.
So to get into the, I guess, political environment of Labor, Liberal, the July 2 election, all the rest, you'd said that a change of government won't do anything property market-wise. I'm going to come back to you on it. You have very strong feelings on this, the open letter to Bill Shorten, all the rest of that.
Yeah, well, I think that's a negative gearing, obviously thing, and obviously there's a fair amount of self-interest in that, insofar as if, in my opinion, everyone might have read recently the Saul Eslake kind of commentary about getting rid of negative gearing, and it does, in my opinion, this is my opinion, of course, people think I'm taking a position because I am self-interested in the market, because the market won't crash, but there will be property price decreases. It's absolutism that not as many people will be able to or want or be interested in investing in property if they put those things in place. probably might even disagree, because Simon's got a very purist hat on in this, and maybe you do agree. I'm actually of the position that negative gearing being in place since 1915, I actually think it's a part of, I think it's a tax treatment, and I think it should be a tax treatment. If I'm a household and I'm earning $50,000, okay, so, and you can also replace that for, I'm BHP and I'm earning $50 million, okay, and then I also buy this other asset over here, let's call this business over here, and that business is a property for me, and that loses $10,000 a year. Well, my income is only $40,000 a year. I'm not making it up. It's just like BHP has another business that they might have bought and lost a ton of money on, that lost $10 million, their income is now $40 million. It's not made up. This is not a, so in my opinion is, even though people tend to credit Saul Eastlake because he is obviously a well-credentialed economist, and I'm not saying, but at the end of the day, it's an ideology in my point of view that they see as being, that coincides with the way that they think the world should be. I think it will be a disaster, and at the end of the day, there's obviously, look, I think you're going to go in a direction which is actually, there's some good news on the horizon, I think, for a lot of people in this room, but my point is that there's no denying, with mining out of the picture at the moment, you might bring some light on that in a second as to what you might explain, but jobs have got to come from somewhere at this point in time. And investment's got to come from somewhere. And right now, looking around the table, obviously you've got tourism, which is a sort of a little speck of dust in the major scheme of things in the Australian economy. Property's it, and construction's it, and there's infrastructure spending, which is more governmental and co-investment sort of schemes. But from my point of view, property from the common man is obviously, I don't think they want to put an axe through that, and I see that as likely. So I think that's, honestly, if anyone hasn't had a read of my article, which got some really good, obviously, viewings nationally of that, I would encourage them to, because it's in your interest, if you believe in it, to actually fight for that argument, because we don't have, I think it's almost like we are the silent majority. We go to work every day and we put our heads down and bums up, but there's people out there who are professional whingers who honestly get out there every day, and they can, because they've got 8 hours a day, because they don't have freaking jobs. And they get out there and they put up posts and they argue with people, to change things, so they can say, okay, all you people in this room, you guys are making money, give me a bit of it. And I'm saying, look, obviously I want to be fair, I do, but I think fair has to be assessed in a proper fashion. I haven't finished with that one. The only other, there's the capital gains tax debate. Everyone's called the capital gains tax discount. Have you heard the word capital gains tax discount? It's been a tax discount since 1999. If you walk into the supermarket and you see something that's been on discount for 17 years, that's a freaking price. It's not a discount anymore. So this discount we're all getting is rubbish. What it does, it's great to hold in a political environment for either Malcolm Turnbull to say, well, we're going to keep it, so you guys, they're using it as a pawn. They're saying, we're going to keep it, so you guys keep the discount. We're doing awesome, right? And then the other side, we're going to lose the discount, right? So they're going to appeal to, obviously, the other side of politics. My opinion is it's not a discount anymore, so we need to start to change our rhetoric and understand that bottom line, if you're going to give me something that you encourage me to go out and buy and spend $1 million on, and it's going to make it $1 million, and then half of that profit is going to go to the government, the bottom line is I will reassess whether I actually do it in the first place. Okay? Now, you're not really into politics, at least to the extent that you probably don't want to put too much of this, but I'd be very interested to see, I don't want to see this, mind you, but if you let this happen, the tax receipts that will be occurring in the next 2, 3, 4 years from what I believe to be more of a decimated industry, at least for a period of time, I think would make them think again, and it would be a very embarrassing turnaround. So that's my spray.
So Simon, you'd said you couldn't care less whether it was Liberal or Labor, because it doesn't make a difference in the end.
No, not really. No, not a great deal. I think, to pick up on some of your points, whenever you talk about the government's fiscal position here in Australia, and I don't know a great deal about politics here in Australia, is they always talk about broadening the tax base as a mechanism to actually resolve the issue. But the thing is as soon as you start talking about doing that, you put offside a lot of people, and the minute you do that, it gets dumped immediately. So what they do is, what will eventually happen is that the governments will move towards spending more money because they love spending more money. And governments don't have any money other than yours and mine. They don't want to actually, and that's not meant to be anti-government, by the way, they don't. So what they'll do is they'll move towards a process where the central bank prints the money to facilitate the spending. And that's what we're seeing in China and Japan. It's what they're advocating in the United States. It's what the central bank in Europe is doing, and it will spread to Australia.
So you're saying that they're going to be printing money over and above changes to taxation system?
Yeah, I don't think there's going to be an enormous, anything like changing the capital gains tax or changing negative gearing. It will fall into the too hard basket eventually.
Yeah. Well, it's certainly on their agenda. My opinion is, and I don't mean this to be cheeky, I actually think when you look at the numbers, and this is a terrible way to look at things, I am a cynic, Labor is not going to win, and whether there's probably going to be some Labor people in this room, and I say that really, really churlishly, I suppose. In one regard, go where the money goes. Betting, I always go for the betting odds. Go straight to UBET, and I mean honestly, that's.
If Labor were to win the election, they're far more amenable to the idea of money printing, and it's the amount of money that's created out of thin air in an economy that determines the expansion in the economy. GDP, gross domestic product, is just measuring the dollar amounts in the economy. The only way nominal GDP can actually rise is for the amount of money in the economy to rise, and I'm not sure to the degree to which most people in this room, I don't mean this unpleasantly, but when you go to Westpac Bank and you borrow some money to buy an apartment, Westpac Bank doesn't lend you somebody's savings. Westpac Bank has a license to expand its balance sheet and create money out of thin air. And Australia is a country that for the last 30 years has created more money out of thin air than any other a major industrialised country apart from China.
Why is it?
Sorry?
Why is that?
Because we like the effects of it, because it pushes up property prices, which means as the property prices go up, you go and borrow some more money from the bank.
Like heroin addicts.
Which means more money gets printed, which we believe that if you borrow more money from a bank that's printed out of thin air, that you go and buy something, that means that you've purchased something which creates a job, which creates income for that person, which means they can go and spend more money. It's an utter nonsense, but that's not the point. It will keep happening.
So from a business perspective then, Ramzey, if we're talking about taxation changes, seems media-wise at least, they're always talking and rather targeting even the top end of town, business owners, people who make money, profiteering, that sort of thing. As an employer, as a business owner, we were talking earlier, you've got 2 new sites coming up for grounds locations. If they start attacking business tax-wise, how does that change what you do as a business model in terms of employing people, expansion plans? If you can talk on that for a little bit.
I think it's, as my business has grown from, 100 people, 200 people, 330 staff now, it's been really hard, the taxation and the payroll tax and all these sort of taxes that come in, and when you're not aware, you just love building, creating and, employing people and just want to see this amazing business go up and do something for the community and the people and even the country, create a destination for it where people keep coming, and 15,000 people come through there a week, and you cop all this back end sort of stuff. It's like a whole new language you got to kind of learn to kind of say, okay, hold on, we've got to expand. The business is making amazing money, but we're paying so much tax and payroll tax and all this sort of stuff.
Is that a disincentive in any level?
It's hard,
to not grow it any further? To just say enough is enough, I won't do any more?
I can look at that. I've looked at that and saying, for enough I won't do it. But I think, from the customers coming every day and doing something great and inspiring, it's, I think if I didn't do that, not only, number one, my people would leave, because they just want to keep growing and keep knowing and getting more. It's like it's just the energy, it just keeps growing, but I suppose it just comes down to the directors about learning, getting
Thank
proper...
God for the Ramzeys of this world.
Getting proper advice, all this stuff's new to me and I'm learning about it, I'm reading and so it is hard, but it's just a new stage of growth I've got to go through, a new stage of learning I've got to go through, and prior to my history, there's a lot of stuff I went through with my dad, and he's an amazing entrepreneur, and then went broke, and then borrowing money from banks. I didn't borrow money from banks, and without the banks you can't expand, or private equity you can't expand, so it's just a new lesson.
Mate, is that something, sorry to interrupt on the moderation sort of job, but is that something you'd be prepared to share with us, like your story with your dad and stuff like that?
Absolutely, I think it's one of the most valuable lessons I ever learned. I wouldn't be where I am without it. So basically, my father was this amazing entrepreneur. Came from Lebanon. My dad's Lebanese, mum's Australian. Came over here, and when I was young, he was always working hard. And you know, I think the biggest lesson I learned from him is persistence and hard work. And I was kind of spoiled back then. I bought my first cafe at 20 years old, and he was basically worth $100 million and had property, amazing food service business, and that's where I got my you know, knowledge about all the food service and the game and all that sort of stuff from him. When the last crash happened, basically wiped him out and lost everything. I built around 7-8 cafes, put all my earnings into his business and tried to keep him survive, and I lost it. But and so the Grounds was kind of born out of a need and desire to look after my family and do something truly great, and it's paid off. And you know, I wouldn't be where I am without those lessons. Yeah. Yeah.
What about your time in Chicago, in the sense of some of your mentors
Yep.
who helped you, I guess, sort of articulate your ideas perhaps, or at least give focus
Yep.
to your intentions?
So with me, out of that, I was very bad in school. You know, they labelled me with ADHD and all this sort of garbage. And you know, I went on and started reading, and I started reading about self-development and all this sort of stuff. I was like, what the hell has self-development got to do with business? You know, your mind and all that. And unfortunately for me, anyway, I studied with DeMartini and a few amazing Tony Robbins and that. When you got all these blocks in your head, you know, stops you from moving forward. The only person that stops, for me, this is what I believe, the only person that stops you from going forward is yourself. It's no one else's issues, no one else's problems, yourself. So for me, I started reading, and my sister was always creative, and you know, she was always this amazing artist, and I said, you know, I want to learn how to do that. And I think everyone inside them is a true artist and is true to be able to create and build amazing things. So I started studying creativity, and that's my girlfriend there as well. She works with me as well. So basically, she loves art and she loves creativity as well. And we,
Did she do your tattoo?
yeah, no. She's responsible for everything looking beautiful at the ground. So yeah. So yeah, I studied Edward de Bono and went to Chicago. Me and her went to Chicago, and we studied with his institutes, and we you know, you can learn it. It's just a system, and you know, there's obviously the 6 hats, and there's idea generation, all these random words you can use, and just help. It just made everything flow easier. You know, it's something you can learn. It's a process, and yeah, it's phenomenally amazing. I applied that to my business, and for us, it's really easy to create. It's really easy to build. It's really easy to make money, but it's just, yeah, the things that we're going through now, it's always lessons. Obviously the people, you know, getting the right people, understanding culture, and then understanding the taxes, and now how to grow your business to a stage
Bringing
where
it all together.
Yeah,
Isn't it incredible how you could condense all the money you've made in a short period of time and say, okay, well, you've made that clearly since the GFC until now, and that's a big sum of money, but everything that goes before it, when you're getting paid literally minus $10 an hour, when you add it all up, you know, it's amazing the amount of unpaid effort that goes into it.
Oh, huge, yeah, it's phenomenally huge, you know, yeah.
The obvious question for everybody tonight, market direction, where to invest today, where to invest 2 years' time, 5 years' time. If I get your thoughts and then bring you in at the end of that as well.
Yeah. Well, I probably won't hog it too much insofar as everyone in the room probably knows where I feel. We're very down on Melbourne. We're very down on Sydney. It's a generic statement because obviously there's exceptions to that rule insofar as premium property, etc. We're very bullish on 2 things in particular, which is Brisbane as a long-term core asset, something you should hold and make a decision to buy now. But I wouldn't necessarily do it if you've already got 6 properties in Brisbane. What I'd actually be doing, so that's more of a, while I won't advise on a generic basis in this environment, I would say, well, if you own 6 properties in Brisbane and none in Melbourne and Sydney, I'd be waiting for what I think lies ahead in Sydney. Okay, that's kind of what I mean by that, because obviously just for obvious diversification reasons.
And is that to say sit on the sidelines, fill the coffers for now and just be ready for that when that happens?
Yes, I don't think there's any harm in giving blanket advice. No harm could come of paying down on your mortgage or your offset account. I don't think that could be conceived as ill advice in anyone's language. And the other would be obvious. This is probably my most. This probably sounds the riskiest, but obviously, you know, everyone who knows me and what I do and how I apply my logic, and obviously from a demographic perspective, for us, a very easy bet, something to see, which is quite obvious for us, is the Gold Coast. Sounds cynical, sounds sort of even risky at some degree, but for me, and I know a few people of you heard this, but let me say it again for the ones that haven't. There's a bit of cockiness in this statement, but there is absolute logic behind it insofar as I can show you almost the arithmetic. well, absolutely the arithmetic behind it that makes this happen. Gold Coast for me is people have asked me for a long time and how I've made money and what I do. And obviously you're in property. I can't work magic like some of these guys do and make 52% in a year from volatile markets. That's not what we do. But I'm going to say a real shit investor probably is going to make money from property anyway, okay? Which historically since 1901 has always outstripped inflation by generally between 1% and 2%. So you're going to do okay anyway, even if you bugger it up. What I'm saying is the person that buggers it up is going to double their money in a general sense, in 13, 14 years, right? People in this room would be on the side of 10 years and better, right? And I just think I can do it from 6.5 years by being active and finding good properties. I suppose what I'm trying to say is, so if I imagine the analogy of a card game, I'm not a gambler by the way, I hate casinos and I don't really understand them, but I know enough to know that if you were playing blackjack, the house is always in the house favour, and let's say that number is at least 51 to them and 49 to us. So all I'm doing with my sort of arithmetic that's going on in my head, I'm just sort of making it in my favour, doing it very slowly at 55 to 60%. I'm hoarding a lot more chips than others over time, and I know which bets I can take. But let's just say I told you, right, that there's a poker machine over there that spits out cash every Thursday afternoon, right? And obviously I've been scratching my head at Gold Coast for years that I've studied it and not participating in it as well. I participated in the last 2 cycles and going, well, I don't want to play this machine, I don't trust it, but I'd be foolish to at least not check it out. So I've checked it out, and obviously the first thing I'll stop, which is a bit of a misnomer, is Gold Coast is Australia's 6th largest city. So it is a big city and it has some robust growth. It is Queensland's driver of employment at the moment for obvious reasons. Tourism, Aussie dollar, the good old-fashioned bogan holidays back in vogue versus going to Hawaii, going to Bali, going to Fiji, etc. Construction and hospitality, which are the 3 biggest industries, amongst other things. In any event, having worked that out, Gold Coast has absolute volatility to it. And I just think you actually probably understand this better than most. Everyone says volatility and it immediately puts a negative impression in your head. Immediately. But volatility goes both ways. So I'm interested in the upside volatility as well. So anyway, that's another conversation if people who already haven't heard the conversation. So on Gold Coast.
So you pick for long term, and call that medium to long term Brisbane.
Yep.
And short term for Gold Coast?
Well, when I say medium to long term, I'm not a net seller of property. People misunderstand what I do. I just do things 2 different ways. I believe you buy core assets and you never sell them, and then you trade. And I think it's very unfair for people who don't know the property industry I believe, and this crosses over from economics and arithmetic to psychology. I believe that your mind works when your wallet's fat, right? The dumbest decisions I've ever made in my life is when I was broke, right? You don't make smart decisions, so make it. So my point is, if I plant a seed over there, with my core assets, I can pretty much guarantee I'm going to be wealthy here. All I've got to do is get there. But if you can't get there, what's the point? So one thing I've learned, and this is just me, it's personal, it's not for everyone. Some people have either really great incomes. We've got a client that's got 14 properties with us, sits in Adelaide, earning awesome income, and he's not interested in being an active investor, and that's fine because he's got his thing. For me, what I'm saying to you is that I know that I need to also have these little seeds that are going to put cash in my pocket every 3, 6, 8, 9 years, or every 3 years, every 5 years, every 7 years. So what I do is I remind myself along the way why I'm doing it. So I need a little cash spur, I suppose, like a little bit of sugar hit along the way. And by doing things like the Gold Coast, what it says to me is that once you do Gold Coast, make no mistake, it's like booking a trade. When you book a trade, you're doing it for the trade. Don't buy Gold Coast and expect to hold on to it long term and not get a heart attack ride along the way, if that's what I'm saying. So you buy it and you are out. You pick your trade, you're buying at 300 grand, you're going to go for 450, you sell at 450. Don't sort of argue the toss at that moment, should I hold on for the 580, because we were agreeing on something we've said to each other many times, never ever confuse a bull market with your brains. And that's the situation a lot of Australians and certainly Sydney and Melbourneites have been in the last few weeks. Anyway, long story
Simon,
short, 2 markets.
Your thoughts then, maybe not even property centric, but markets to be investing in or at least mindful of or watchful of in the future?
Well, I think at the moment the world is bifurcated in that on the one hand you've got the United States where the amount of money that's being created, and my entire framework is about the amount of money that's being created, because if you imagine this room, if we could shut all the doors, there's a certain amount of money in the room, and if we could inject more money into the room, the value of everything in this room would actually lift. And then we'd all get terribly excited when the actual number of people and things going on in here hasn't actually changed. So we've got a situation where the United States is going in a particular direction, Switzerland, who really cares, except for chocolate and cuckoo clocks, but very good chocolate actually. I'm going there 2 weeks' time for the chocolate. That's all heading one way. China and Japan is going the other way. But perhaps the more important thing is to look at it from a 30, 40, 50 year, even a 70 year perspective and say, well, how long has this been going on? How long have we been printing money? And one of the ways to look at that is, well, how long has debt been accumulating? And has the debt just gone up gradually, or has it suddenly gone up a lot? And you'd probably be all aware it's gone up a hell of a lot recently. And what that means is we're getting towards the end game where things get messy. And when things get messy, central banks and governments do some interesting stuff where they'll try and get involved, and they try and make the messy look less messy. Now,
but how are they going to do that? Make the messy look less messy? How's that?
Well, in the case of the European banks, is they try and make sure that the various signals that tell us that things are going wrong, like bond prices going in a particular direction, they try and make sure that doesn't happen by saying, well, we'll go and buy the bonds, and they buy the bonds by printing the money to actually do so. So in the United States, if the US was to start to slow, and we're seeing this in terms of not just the economy slowing, but the profit growth amongst companies is slowing very, very rapidly. And we've got governments trying to make sure we don't get terribly sad about this and start selling US equities. So US equities are within 1 or 2% all-time record highs, even though company profits are down almost 20%. Ultimately, you've got Japan and China going one way, America going the other way, Europe and Australia and the UK somewhere in between. Importantly, we're at the back end of a 70-year cycle. Things are slowing, things are getting messy, governments are trying to stop it, and my guess is there's two things. The first one is crash risk has put my teeth back in. Crash risk has gone up substantially. That's not a prediction. It's not a forecast.
Crash risk being another GFC? Crash
no,
risk?
A stock market crash.
You're
like
talking
in
more
87, not like in 2008.
No, okay.
So straight down. Because if you try and stop the water coming out of the dam and you put your finger in the dam, you'll stop the water until all of a sudden the whole thing cracks and the dam comes down. One thing we know from what the Chinese and the Japanese have done is we know how central banks and governments respond when things get crappy. They print more money. It's easy, it's simple. When the Americans slow down and things get crappy, they'll print more money. So what I'm saying here is over the next year, things could get very messy. I don't know. And you're saying, what should you invest in between now and then? I don't really know, because it's all over the place. I would be, of course, if I'm telling you that Japan and China are printing and America isn't and Switzerland isn't, I'm going to be short the US, I'm going to be short Switzerland, I'm going to be long China, I'm going to be long Japan. I'm going to be short the Japanese yen, I'm going to be short the Chinese yuan, I'm going to be long the US dollar. But none of that's terribly important. What's really important is if you're property owners and you're sitting there and you suddenly see a crash, were it to occur, you'd probably imagine that the world's about to end. It won't. Not because something magical is going to happen, but because the central banks will do the one thing that they can only do in such a situation, is they'll print lots of money. And if you print lots of money, asset prices will start to rise.
There has to be an end to that, though. You can't just perpetually print money every time there's a sign of crisis.
Yeah, no, we've seen lots of examples how that ends. Weimar Republic, Zimbabwe. Yeah, it's not good.
No.
But that's 5-7 years down the track. So,
And so when that happens, when your Zimbabwe is happening in Australia, what do you do? What can you do?
well,
If everyone hasn't got the message so far, I'm not sure it was just explained that explicitly. We're talking about inflation. Inflation has to happen, and it has to. You can't. You get these random economists like Paul Krugman overseas and this sort of stuff who think obviously everyone that thinks that we didn't get inflation straight after the GFC, well, they were wrong. And I'm saying, well, if you've got cancer, it takes a freaking long time to get over cancer. Do you know what I mean? It's not just one injection, it all happens. We've got to get inflation.
Paul Krugman is the most important economist in the world. I probably profoundly disagree with everything that's ever come out of his mouth, but he is the most influential economist in the world.
To his wife, I'm sure.
And he says I'm seriously, he holds the ear of just about every global leader. He won a Nobel Prize for economics, and he basically believes that the United States government should basically spend several $1 trillion in repairing the infrastructure of the United States, the roads, the railways, the ports, the airports, the power stations, etc. And he's a great believer that it will not create inflation. And I have very, very little doubt that in 2017, once we have a new president in the White House, you will hear the United States saying that they intend to repair their infrastructure. And the US government will issue infrastructure bonds somewhere. The talk in financial markets is between $1 to $2 trillion. At the end of the GFC, the talk was that the United States needed to spend 3.5. Well, they probably need to spend 5 because we've gone another 7 years. As soon as you need to spend 5 and you say you're going to, it becomes 7.
Just to recap, you are talking trillions.
Trillions. And to put that into context, the Australian economy is about 1.2 trillion US dollars equivalent. So we're talking the United States over the next 5 years will announce in 2017 it's going to spend the equivalent of the entire Australian economy every year.
Now, there's actually a backstory
At
to
least.
this. There's actually a
Maybe
backstory
twice.
to this, and I don't know if everyone's aware of this. So America, and actually I'm going to pass story, I'm just trying to head in a direction. America, their infrastructure is terrible. Bridges, etc. So back over to you to head.
Yeah, so I think one of the things you're going to see in the back half of 2017 is the United States will go on a massive fiscal expansion, and it won't really matter who's in the White House. They'll do it because Paul Krugman said it's a good idea, and everybody else is agreeing with him. I think the Japanese, they've already made their decision. They'll spend 1 to 2 trillion US dollars equivalent, mostly on the remilitarization of Japan. If that makes you feel a bit uncomfortable, it probably should. The Chinese will they'll spend probably 1 to 2 trillion, about maybe $1 trillion on the Silk Road project, which is a project of building a trade route between China and Europe, and then about another $1 trillion on the military aspect. I think the Europeans will probably quite easily spend a couple of trillion. They'll be primarily in refugee settlement. So in the second half of 2017, I wouldn't be at all surprised to see a vast amount of money created and demand for, well, if you're going to build roads and railways and airports and tanks, you need a lot of steel, you need a lot of cement.
Is that going to lead to a second resources boom
coal
for us? A second resources boom for us?
Yeah. So the resource boom or crash the resource crash we're seeing currently can go on for another year or so, but I would fully expect in the second half of 2017. That's expect. So if things change, then I'll change my view. But looking forward at the moment, in the second half of 2017, Australia is going to enjoy a second resource boom. Yeah. We're going to get our second get out of free jail card, and
you're obviously saying that there's going to be a shock to a lot of people in this room. I take your word at a certain level, and I really put a lot of stock in that. Well, so that's great. That's great news in a I suppose a sense that obviously
in a 5-year view,
it puts a lot of sugar on the table for people like us who can take advantage of it. I mean, no one here is. I'm not trying to get the Nobel Peace Prize myself. I'm just trying to make money. Yeah. For myself and to you people. Well, I make no apologies for that.
Over the next year, it could be very rough, so keep your powder dry. And if things get really, really bad, central banks, we know from what the Chinese and Japanese are doing, that we know what they'll do. It's what the Bundesbank did in Germany in the 1920s. It's what they have to do. They don't have any choice in the matter. So in that regard, I can't give advice because I don't understand your personal circumstances and I'm not licensed to give you advice, but I know that from managing our fund perspective, if we saw a major crash, for example, in stock markets over the next year, we will be backing up the truck. We'll be strapping on the buying boots.
So we've heard property market-wise, interstate at least, globally, what may
I can't talk
come
about
to.
Australia,
No,
Melbourne versus Brisbane.
In terms of your own, dealings and whatnot, I want to know how you arrived at Alexandria, how you found that site, what it was that led you there to start the grounds. You also mentioned you've got 2 more sites coming on. What's your logic? How do you actually find these sites? What's your method of finding them? What attracts you to them? Why do they work for you? Why did Alexandria work? Why are these next 2?
Yeah, I suppose for me it was history. I've been in the city. I started in the city in the beginning. Building a lot of lobby area cafes for Australia Square, Chifley Tower, MLC. I was based around there. I knew the game, and my father's business was in Alexandria as well, so I kind of knew the market.
So it was local.
Yeah, I knew. I used to go to his work, and there would be nothing to eat, and as well when he lost everything, I sold everything, and kind of. I had a business partner there and didn't go too well, so I had no way back into the city, so I had nothing else other than Alexandria. And I don't know, I believe, you go through the hard yards to get to the good yards, and I just believe I had, just crazy determination. And
what about the 2 new ones that you've got?
2 new ones, I know the city, and it's in galleries in the city, and it's with IPO. They're the ones that gave me Chifley back in the old days, and they've seen what I'd done, and they gave me a really good deal, gave me a lot of money to come in there. And I also knew the corporate market in terms of what Lend-Lease are trying to do, and Spotless Catering Industries, Sodexo, I'm sure you've heard of them. They run that corporate market, the catering market, and because we used to supply them with my father's business, I know that market, and I know it's really good. And everyone's after something new. They're after something innovative and something creative, and something really beautiful, and we're able to put that to the table. So
is that like you're looking for gaps in the market in some sense? You're looking to fill a void that nobody else is doing?
I'm looking always, if we, the grounds and my people, can't change the game, then we're not looking at doing it. So we've got to make a big impact. We've got to change it, and I don't know, I believe the city doesn't have life, and there's nothing in the city, and we're looking to inject that back and create something truly beautiful and something truly amazing that will bring people to a place that they can connect and really enjoy. And it's not just a place to go to work, or you get something out of it.
We were talking earlier about linear thinking and people just doing the same thing over and over because it works. So the model works, why it's not fixed, it's not broken, don't fix it. That's the complete opposite of what you've just said, that you're not going with the trend, you're actually going against it to find new things.
Absolutely, yeah. And that's been hard, IPO, when they came to do me the deal, and this deal's been going on, it's been sitting there just vacant for a year. I said, every rule you have, I'm going to break it. So if you want to do a deal with me, you've got to understand that. And so it's taken a year.
How was that received?
It was hard. Even the council, the council actually said to me, we'll let this go through, but never ever come and ask me for another thing again. And that was, it was someone pretty high up in the council, so it was pretty good. And Lend-Lease, we basically, this deal's been sitting on the table for, I don't tender for anything as well. Like, I believe in what we do, I believe in my people, I believe in what we're capable of. And I don't know, for some reason I tendered on it. I believe in the site. I believe we can do something really different for their people and for us. And it was funny. So it was a lot of bartering with them, and they're used to doing 5-year leases, and we said we're not going to do it. It has to be a 7-year lease and all this sort of stuff. So yeah, I believe we're changing. We're changing.
So is this you in there negotiating with council, with landlords, etc.? You're doing all that yourself, or you have delegates to do it for you?
No, I'm doing it myself and my business partner, and as well my interior team and stylist and all that sort of stuff. I think we've got to really. We also talk for Sydney Council. One department, other departments don't like us, but Clover Moore's department likes us, so it's good. But obviously they've got system and process to follow, and I understand you need them, but also understand they need to be broken as well.
So, sorry to interrupt. Can I ask you a question? So you've got the businesses almost as the definition of, like, no disrespect, got nothing to do with hospitality, wouldn't have a clue. All coffees taste the same to me. Good. Your business is the definition of, if you build it, they will come. Because I look at that space and I go, how would you think of getting something out of the way of everyone else in the world, and just you build it, they will come, and then that kind of happened to you. That to me is like, I'll admit I wouldn't have done it, and I do a lot of things. That's my business to go against the grain. So my thing is, like, that's a ballsy move to go and put something there, and you just know that people will arrive if you build something like that.
Yeah, as well, I also say, you know, I hate the word hospitality, I hate the word cafe. I don't think we're in that game, you know. We're in the game of creating really unique and memorable experiences for people, and try to, you know, bring that connection and bring that time that everyone's lost. Everyone's so fast on the pace, and, you know, if we can create this really beautiful environment and really good people and really good energy in there, people are going to come, because we believe in it. If I believe in it, my people believe in it, the customers are going to believe in it.
It sort of leads me to my final question, and I'll go around all three of you for this, but the biggest driver to your success, it sounds like it's almost a self-belief for you. Equate that. I mean, why do you believe you are successful in what you do? Is there any one thing? Is it as a routine that you stick to, a self-belief, like you said, self-determination?
I just think, you know, for me, and I'm born to create and build great and beautiful businesses, you know, and beautiful venues, and if I do that, you know, I'm not going to have any issue, you know, and then I hire the next person next to me, whether it's a stylist or she loves art, you know, and then there's this whole bigger vision. We're creating the world's most memorable venues. It's about the visions, and it's dedication, persistence. You know, you've got to be willing to work hard, and you've got to believe all the lessons that you had in your past are for your good, not for your bad. And I don't know, it's that one day, that one time, that 1 minute, I turned my life around, and things have changed for the good.
And I don't know if you want to share this with the audience, tell me if it's something we spoke about before. It's certainly, I think, one of the regrets and one of our prior conversations we've had personally when I was at the Grounds with you, is that, you know, you kind of felt like you took a space and that really was an unused space, and it was kind of useless to anyone but yourself. And maybe it was worth X amount of dollars, which is the conversation we're heading to, and you feel like you moved in there, now you created a space for some property owner that now made it worth X amount of dollars. Yep. Firstly, if you're prepared to share the numbers, you don't have to. And then secondly, at the other end, how you felt about that experience. And
I think we learned a lot. And just maybe you don't know as well, it was owned by a previous landlord. That the business went into receivership. I could have bought it for 25 million, the site. So the site is housed, I think at that time it only housed Blue Sky Hedge Red Bull. Red Bull moved out.
How big a site are you talking? Well, size?
I think around 20,000 square metres. So when the crash happened as well, so they picked it up they bought the asset, the debt asset from Suncorp. Goldman Sachs bought it for around 25 mil. And they took me on, you know. I was in court for 3 years with them, fighting a battle just basically over leases and all this sort of stuff. And recently they got all the, last 6 months to a year, they got all these tenants started flooding in and coming in, and it was really funny. And they basically sold it for 110 million, the site. Jeez. And then the landlord,
what was the timeline on that, from when you could have bought it for 25 to when they sold it for 110?
It was only 2 years. 2 years. So it's going down in record under one of the greatest in Alexandria. But it's quite funny. The landlord rings me on the phone and says, "Hey, we've got this new site in Queensland. Do you want to come do all the hospitality?" You know,
it's the same guy who's suing you, yeah?
I spent 300,000 in court fees on the fucking. I'm like, yeah. But you know, I learn a lot, you know, and yeah. So it's. Yeah.
Good on you, mate.
Simon, your success, you attribute to anything in particular?
I think I'll sort of pick up on some of the things that Rami was saying, and then and also relate it back to, I know somebody asked a question, you know, what do you really need to learn? You know, if you had to learn something in terms of investing, what should you do? The very first thing you should do is you should actually learn about yourself, because that's why you've been such a great success. You learned what your demons were. You learned what your cognitive biases were. What were the things that you did? You learned that, and I think one of the things you learn is that if you do the same thing as the average person out there, you're going to get an average result. It's really, really straightforward. So if you want to actually make a substantially different, a substantially greater sum than everybody else, you've got to be doing something different to everybody else, which is what you've come along and done. And so if you're going to approach things from a linear perspective, if you're going to start looking at it the way that everybody else does and say, well, I can do something incrementally different, it doesn't really cut the mustard. But at the same time, to pick up on what you were saying, is if you try and do something very substantially different, boy, you've got to work bloody hard. You've got to bash a lot of heads and break down a lot of doors, haven't you, to try and actually get there. So I think there's a number of things. The first one is work out what your dream is and let that dream be massive. Let it be, something quite extraordinary. Let it be a quantum leap. And because the financial markets, contrary to what you imagine, almost all thinking within financial markets is incremental. All that's happened is things started back in the 50s with efficient market theory, or Burton Malkovich, and all they've done is just apply technology to that over the years. So the first thing is think of something different. The second thing is work out what are the stupid aspects of your personality that are making you think things that you really shouldn't be thinking. Because what we all do, I don't know if you've done this, you get an idea in your head and then you go and read everything you possibly can that confirms your idea. Wrong. Go and read everything you possibly can that says you're an idiot. That's the most important thing. Such that...
But why though? Why
Sorry?
that one? That seems counterintuitive to a lot of people. Why?
Because you want to work out what your cognitive bias is. What are those aspects of you that mean you make bad decisions? So you want to know that if you've got this massive dream, that this dream is not because you're an idiot, but because you really truly believe in this and you can see it so clearly. And that's what happened, because it's a tough, isn't it? You've got to break down doors. So you've got to truly believe in what you're doing. Because if you don't, what then happens is when something goes wrong, and I'll absolutely guarantee you something will go wrong, because there's this thing called the economic cycle. Something will go wrong, and as your dad discovered, and you get tested. And that's the point. You work out how much you really believe in what you're doing. And then what you've got to try and do is, one of the other things is, there's an economist called John Maynard Keynes, probably the most famous economist of all time. And he had a great statement. He said, markets can remain dysfunctional, in other words, bad shit can happen, for much longer than you can stay solvent. So you've got to try and make sure that whatever it is you're doing is such, and no disrespect, this is what caught your father out, wasn't it? I mean, effectively, bad shit happened longer than he could survive, and if he could have held on for another 2 years, he'd probably be worth 300 now, wouldn't he?
Yeah.
That's all it really comes down to. So it's a case of, number one, having a big hairy dream. Number two, making sure you truly believe in that dream. Number three, making sure that you haven't got a whole bunch of stupid stuff in your head. So go and read people like Charlie Munger, because he's absolutely brilliant at that sort of thing, so that you keep on pushing ahead. And then make sure, as with any new business venture or any venture of description, make sure you've got enough runway. So if in the next year the shit hits the fan, to be crude, make sure that, when I say to you, sit it out, tough it out, make sure you've got the financial capacity to tough it out. Because there is nothing worse than having to capitulate only to see everything go the way you thought.
Your success, how did that happen?
Well, before I do that, I'm just going to pick up on one thing, because I kind of share a bit of a cynical edge for people that know me. I kind of think you've got some, like, to hear you talk, honestly, and I've got some sort of people in my life at the moment that are kind of taking me to another level that I've probably never explored out of, not laziness, I just kind of think that I thought my life was in one direction and perhaps not in another space. What I'm trying to say is I kind of think, and I think everyone in this room, just by definition of being here, but all those that know me or know me involved in our business and what we do, I honestly think that if you, the test, my test is to pick up the phone and dial Optus or dial Telstra, and you get this idiot from wherever he's calling. And the bottom line is, the level of intelligence, right? Intelligence from big business and everyone is so low. What I'm trying to say is everyone out there is so moronic. It's not hard to be very good, right? Right? And I really, really mean that. I'm saying for anyone who wants to test themselves out there and go and start a business, it ain't freaking hard because everyone else is so moronic. And that's a really sad statement to make, actually. Really, really sad statement. So anyone on that threshold, I kind of say give it a crack. Not necessarily because of passion, which I have, right? I'm saying because it's so freaking easy, right? You just got to stick it out for a bit. So that's the first point. And second to that, I just think more really simplistic things. I love clients. I love the feeling that they get when I make them happy, and I love the feeling that money makes when the feeling that I get when I make money as well. And I know, and I bestow those same thoughts. I don't think it'll be any different for people like yourself. And I just think at the end of the day, well, if my client's happy, money happens. So if I'm doing the right things, money is a byproduct of that. But if you go out just to pursue money for the sake of pursuing money in and of itself, I think that's the wrong reason. I think pretty much all of us would at least agree if money is the outcome, I think you'll fail. And as much as I talk money, because that's one of my biggest statements. We sit down and we talk about property, and I say, this is not about property, this is make money. It's just property is the vehicle for that. That's, it is about the money, but at the end of the day, I think if we can all accept that and acknowledge that place it does for us in our lives, so for me, my commodity is you people. It's not necessarily property, it's you people, keeping you people happy. And I could be doing that, and sorry to say that because you're hospitality, hate that word. You're not just serving coffee, I get that. But I don't think I could give a description to because your place is a zoo, with all due respect.
It is a zoo, I call it a
right?
zoo.
Yeah.
I think we're just at the end of the day all serving people.
Yeah, absolutely. And that makes me happy. Yeah. And I think if you do that and you do that well, and I'll probably, next to both of you, probably cry a little bit of shame here that I don't always think that I think I've got very high highs and very low lows. So I'm probably the most up and down in the spectrum of people that perhaps like yourself that have maintained high, consistent standards all through your life. So I'm probably the most volatile out of those people. But that said, I do have moments of absolute, I'd like to say, at least in my own world, I like to think there's some moments there that when I'm fired up and I want to achieve something, I'm in that space or better, as infrequent as they might appear.
Yeah. One of the things we find when one of the funds I run is what we call a systematic fund. So that means that we take all our ideas and then we create mathematical algorithms to represent those ideas. In other words, you create a computer, you press a button and it goes. There's a rule in system trading, whether you're using technical analysis or whatever else, and the rule number one is whenever you get that signal from that computer, rule number one is you must take that trade, okay? Rule number two is know when not to take the trade. Go figure. So I don't know if you, there was a song once, wasn't it, called "Know When to Hold 'Em, Know When to Fold 'Em."
Oh yeah,
yeah, and that's exactly it, and that's what you've got to work on all the time is to understand: am I holding this because I really want it to work, rather than I'm holding this because I'm absolutely convinced it's going to work? So when you said it's about making money or whatever else, it's not actually about any of those things. It's actually about who you are as a human being and who you want to be and where you want to go and how you want to live your lives. And it's about understanding who you are. Absolutely. And why you make decisions. Because you may hold them when you should fold them, and you may fold them when you should.
Absolutely.
So you've got to know that about yourself more than anything else. Most people in financial markets retire probably 10 years younger than I am currently, because they burn out, because the stress of the interaction between reality and who you are as a human being. If anybody here ever feels, I'm sure everybody here feels bad at some point, yeah? That's the interaction between reality and your value and belief system saying that they're incongruent, something's wrong. When you feel bad, it's the interaction between reality and your value system being congruent. So you've got to work out who you are and what you believe, because if you don't know who you are, it doesn't matter how much technical knowledge you've got, you'll screw up. I see people, the easiest people for me to beat in my business? They're really, really, really intelligent, smart people, because they're far more interested in being right than making money. And they imagine that being right is a representation of who they are as a human being. Bullshit. You want to make good decisions. Yep. Whether that's about picking the right partner, treating your partner in a decent manner, bringing up your kids well. That's the important shit, not what we're talking about today. I'm sorry, I don't mean to be rude, but this is garbage compared to the real stuff out there. And the real stuff is your families. You get that bit right, you'll get this other bit right, because it means you're a functional human being.
Yes, absolutely. And not to put everyone knows I do like to put one foot in the political environment before I get too many tomatoes thrown at me, and then I'll take a step back. My point is actually, it's very serious, and I really do believe this is, I believe, and so and again I say I believe, this is my opinion only, that there is a morality to capitalism. There's an absolute morality to going and having a crack at achieving it. So I suppose what I'm trying to say is, people, and I won't even say myself, I said, but absolutely there's people, 3 people on my left, and Adam included, but if you went out and you aspired to be the best tennis player in the world, largely speaking, I would agree, and I used to be a tennis player, I just want to be the freaking best tennis player I could, the best artist in the world, okay? And you get these people, they want to be the best artist they can, they don't do it for the money. And certainly, like, one of the things you could land on me to explain maybe some of my volatility, I'm an ADD type personality. And certainly had those experiences, myself. So my point is, I'm going to go and do those things, whatever I apply it to. So certainly to go and punish a part of society for being good, for wanting to go and create lots of things, the byproduct is money. But he's not doing it for money. The byproduct for him and all his clients is money, but he's not doing it for money. He just wants to be the best freaking economist he can and hedge fund manager that he can.
I don't want to be the best, I want to be my best. That's all, because that's all I can ever do. And the only reason this guy is so superb at what he does is because you found the balance in who you are as a human being and what you want, and knowing who you are as a human being, not because you've got some special sauce that nobody else knows. It's because you've done the hard yards and you've learnt through your father's pain and everything else, and I take my hat off to you.
Absolutely, and we can't stop what's going to get thrown at us, and that's going to be in perpetuity. That's never ending for people like ourselves. All I'm trying to say is don't apologise for it, and don't sit there and think, oh, am I greedy? Am I doing the wrong thing? Should I be doing a little bit more? At the end of the day, if you're out there and you offer a little bit more to someone, whether it's in this room, you take right now, and if you give that girl over there $10 a week, $100 a week. She'll take it, and at the first week, she'll go and she'll kiss your hand, and she'll think how fantastic that is. And you do that for 12 weeks, after the 13th week you don't give it to her, she's going to think you're a freaking fascist. She's going to go, what the hell are you not giving me that money for? Because it's her. So, there's a lot of psychology in everything we're doing at this point. Now, don't get me wrong, I've crossed a political boundary. All I'm saying is right now, at this moment in time, at least, for where, what it affects us, just don't apologise for being who you are. Don't apologise if you want to make money, whether property be a vehicle for it or not. And for a lot of people in this room, one of the conversations I've always had is, if you've got too much property, consider other things. And I know that doesn't involve me, and that's why I've started now to invite other people into our sphere of influence to say, well, look, I just want to make sure people in this room are making money and happy. And if you've got too much property, it's not a bad idea to divest as well and take a look at some other things. And people like Simon, Ramzey, and I suppose in a certain way, because he might get you to think about other things you can do for your productive life, and start to invest in some other things.
Guys, thank you so much for your time, and especially your honesty. I think yours more so than everybody's, your personal honesty, but really thank you for coming out. We do have 2 gifts for you, and then 2 special
got any questions?
As well.
Yeah, it's a great
Yeah, if you want to
Anybody got any questions?
What's yours?
Wayne?
So, with the imminent crash, which I've been predicting for 5 years, what's going to happen then?
That doesn't make you wrong, by the way.
No.
That's not important.
A little bit
Yeah.
late.
Sorry?
Just a little bit late.
Yeah.
Yeah. So what's going to happen? I mean, the central governments are printing money.
Yeah.
The inflation is going to go up. So what are we talking? Currently we're on a low inflation rate across the globe.
Yeah.
So what do you see happening?
Okay. The crash risk is over the next 12 months, and that's primarily because governments have tried to contain the volatility within global financial markets more than anything
sorry
else.
to interrupt you. You would probably be talking about the American bourse more specifically at its
Sorry?
high, at its 18. Are you talking about
No, globally. Globally.
Globally, everything.
No,
including
central banks globally, all over the world, are trying to control, and they're trying to, stop. It's the boy with the finger in the dike.
Yes,
they're trying
but you
to
were
stop.
talking about the stock market in particular.
Yeah, stocks, but stock markets around the world are at very aggressive and high levels. So then once they start printing, now whether a crash occurs or does not occur, they're going to move to a printing environment. That's because after the last 30 years of money printing, everything is slowing down. Go and get a chart of Australian, American, French, German GDP, gross domestic product, over the last 30 years, and you'll see from the top left to the bottom right, it's going in downward formation. In other words, everything is slowing. Then we'll have a printing period that will go on for a very long period of time. That's when we start to get very high levels of inflation. That's when things get very exciting and there's huge opportunities. And that could last 5-7 years. And then after that, all bets are off.
Is anybody else? Any questions? Need gifts from you then.
Nothing? All right, okay. All right, firstly, so just for the gentleman, okay, Ramzey, I just want to present you with this, and please everyone, obviously, as I know you feel it, give Ramzey Thank you, Simon. Thank you, gentlemen. We really, and Simon as well. Just a little token of our appreciation, and I suppose there's a few of the guys that obviously that we spend our time with, and obviously, if they're not daily in our lives, which they're not daily in our lives, but they're certainly people that we think of when we obviously aspire to greater things, and in a position that obviously now going forward, I'd like to be able to pick up the phone to Simon and sporadically take visits to Adelaide, etc. when I travel there for clients, etc. and obviously poke my head in and see where the lay of the land is. We don't always necessarily agree. One of my big things we had a preface meeting at the start of this to sort of say, how, because I know he can be a bit bearish, not just bearish. He'll tell you exactly how it's going to land and how's now we might not always agree on where property sits in particular, but if it's going to be bad, we've got to hear it, because that's exactly what he's talking about. If we've got those positive biases that keep us from the reality, we're doomed. And that's our job in a nutshell, I suppose, is really, I suppose, in the first instance, make sure not just buy a property, is actually find out, because it's a process of elimination, find out which ones you don't buy to get to where you're at. And for Ramzey, mate, I don't know what to say, honestly. And by the way, Ramzey obviously co-owner, so with Jack, and Jack was actually here the last event we had. Just two amazing, incredible dudes, and honestly, best wishes. I'm really thankful. Again, thank you.
If anybody's got any questions that they want to just come and talk to me directly,
yeah, absolutely. I would
please
suggest
feel
to
free.
most people just grab at least both of these cards if they have them. Ramsey, do you have a card? Or otherwise, Simon, grab a card. Whether you need him now or later. As well, take a card like that, and even as well, because we're a bigger universe than that, just go out to other people and extend and say, look, one of your friends and families, they might be at a certain stage in their life, they might consider something like that, pass the name on. Now, I've just got two other things, because I just want to thank two very important people that have come into my life quite recently as part of the business. A lot of you would know them, a lot of you wouldn't know them. Certainly, just the lady, firstly, that put on the evening. I want to introduce you, if you haven't already met her, Amanda Anderson. Please come up the front. And Amanda, to give her all credit, Amanda's one of those people that over the last, even 6 weeks, right? And she has worked with us for 3 months. It's just got me to think so differently about the business and the opportunities that lie ahead from someone that I think I was just sort of treading water for a while there. So, Amanda, thank you, darling.
Thank you very much.
Okay.
Thank you.
And the other person is actually another lady in the room, and her name is Laura, and she's actually now, if you stand up, Laura, she's a person that we've actually invited into the business, not just because she was a superstar, and to be honest, she got, I think you got a terrific deal, but you could sell differently. But at the end of the day, to keep her on board, she obviously does own a part of the company now, and I'm proud to say that she owns a part of the company, and I'm glad to give it to her, and I wouldn't change a thing. So Laura, and so she's our director of our Brisbane office, and obviously if you don't know her, she is just freak.
Very much so.
She's just freaking incredible. Thank you, Laura. Thank you, darling.
Oh, that's so sweet.
All right, that's it. Other than that, take a break, have a drink, or ask questions if you like, and make the best use of these two guys in front of you, honestly, guys, before they head off.
Thanks, guys.